In 2019, we saw one of the strongest rebounds in crypto markets ever witnessed before in history, with Bitcoin rallying all the way from $3,000 to $14,000 in just 6 months. Following afterwards, markets began to pull back on the excitement, and just when people thought there might be signs of hope around the corner, the unthinkable happened. A global pandemic struck financial markets, causing the greatest liquidity crisis in history and dragging Bitcoin's price down with it. But as time progressed, Bitcoin began to recover swiftly, even outpacing the recovery of gold and stocks. And as the months went by, optimism grew stronger and stronger, leading Bitcoin back to its all-time highs and setting new all-time highs at around $30,000, 50% higher from its previous highs in 2017. To many, this is a surprise. Many saw the Bitcoin halving event, which was supposed to be the major catalyst, as a non-event, as price didn't move immediately to reflect the supply adjustment. But as we talked about for the last 2 years here on the channel, these things not only take time, but fundamentally, markets are driven by both shortages in supply and growth in demand. And just like that, waves of corporations and institutional capital surged into Bitcoin like never before. The game has changed, and institutions can no longer ignore cryptocurrency markets as an asset class. And while many everyday investors have been sleeping on cryptocurrency markets, as Bitcoin extends all the way up to $30,000 and dominance for altcoins remains relatively low near a critical support range, this could be an opportune moment where we see altcoins take back share of the market and spark off the next cycle. Taking history into account, the first altcoin cycle sparked around the time Bitcoin retested its all-time highs at $1,100. And outside of pure speculation, we've got a lot to look forward to in regards to the fundamentals of cryptocurrency markets. DeFi, or decentralized finance, has absolutely sparked in 2020, reaching a total amount of locked up value of over $14.5 billion, originally starting at just $660 million at the beginning of the year. And in last year's video, we made some fantastic picks as well, with Chainlink, a leader in the Oracle industry, going up over 1,500% since we recommended it on the channel, with other oracles following suit as the need for true outside data on blockchains grows. This year, we have a heavy focus on decentralized finance, oracles, and enterprise blockchain tokens, as they've not only led the market in 2020, but have the fundamentals to back long-term growth going into this next cycle. And initially, I'm going to be heavily focused on large cap DeFi cryptocurrencies, starting to focus on the mid and small caps as the cycle continues to grow and we see a trickle down of valuation within cryptocurrency tokens. Nonetheless, we're going to be talking about a wide range of large cap, mid cap, and small cap cryptocurrencies that truly excite me on a fundamental basis. So without further ado, let's dive into my top 10 cryptocurrency picks for 2021. I not only want to recommend that you do your own research, but if you're looking for a platform to purchase all of these tokens for lower fees than major exchanges, I highly recommend checking out my crypto app, Digifox. All the tokens discussed today will be available there, and we support both iOS and Android. Links can be found below in the description, and it's a great way to support the channel. Diving straight into the heart of DeFi, Hedge is our number 10 pick for this year. As DeFi continues to grow, so will decentralized derivatives. Hedge provides the ability to deploy call or put options on cryptocurrencies like Ethereum. For those who may not know, options contracts offer the buyer the opportunity to buy or sell the underlying asset at a given price. This gives you a widening range of profit potential as price exceeds your options contract, while also giving you the ability to possibly mitigate risk. A simple way to think of the separation of calls and puts is going long or short an asset, long being equivalent to a call and short being equivalent to a put. But options are unique in the fact that each position factors the dynamic of price at a given expiration date. Let's say that I wanted to bet ETH will be over $1,000 by April of 2021. I can buy a call option for a specified rate on the market, and if things work out, the value of those calls could significantly rise due to the fact that my contract is in the money, or above, in this case, the strike price. Hedge allows users to do this in an entirely decentralized and permissionless way, and considering the size and demand for options contracts in crypto as well as other asset classes, Hedge could be a major play going forward into 2021. I currently don't own any Hedge, but it's certainly a position I'm considering adding in the coming future as the altcoin market continues to pick up and as I look at more small to mid cap plays in the market. One of my favorite traits about Hedge as a project is that it's not only a great concept at hand, the idea of giving everyone the access to buy call or put options on assets like Ethereum or other types of digital assets, but along with that as well that the project is live. It's already got a thriving community, people utilizing the protocol and actually making profitable trades as well as losses on these call and put option trades that they're placing. And the great thing is it's completely decentralized and trustless. The functionality is simple, and you basically set your own terms by determining the call or put option you want to buy at exactly what strike price, as well as the date for the maturity of those calls or puts. I highly recommend people continue to keep an eye on this, and at a $50 million market circulating supply valuation, I think that this is definitely a steal in the DeFi market that I'm going to continue to watch. For number 9 on our list, we're exploring a new area of the decentralized finance space that could be offering up the opportunity to provide a better form of collateral in the cryptocurrency industry, and that is warp finance. Over the last year, decentralized finance has exploded, predominantly led by the excitement of AMMs or automated market makers like Uniswap that provide decentralized exchange capabilities. What was once a fairy tale dream in the cryptocurrency space has become centralized exchanges' worst nightmare. AMMs are made possible by liquidity providers, users who provide an equitable monetary amount of 2 tokens to a given pool in order to collect trading fees and provide liquidity. The more liquidity there is in the pool, the lower the slippage or price impact users will experience on their swaps. When liquidity providers, or LPs, provide their crypto to the pool, they're given LP tokens. Think of these as digital IOU claims on the original crypto they've deposited. At face value, many would think they don't hold any value. Many people have simply been holding them during this time period. But as of recent, many projects have started to realize the potential of utilizing LP tokens as a golden form of collateral to borrow crypto, with low liquidation risk compared to traditional crypto collateral. And this is where Warp comes in. Warp offers liquidity providers a way to lock up their LP tokens as collateral in order to borrow a wide range of stablecoins at favorable rates, with incredibly low probability of liquidation. In the first week, the protocol attracted millions in LP token deposits, but unfortunately, like many early-stage DeFi protocols, the protocol experienced a flash loan exploit. And while this was an initial scare for the community and the project, the team worked together with white hat hackers to recover a whopping 75% of the stolen funds, while also preparing compensation for those affected and reaching out to large auditing firms in the cryptocurrency ecosystem to rework the security of the platform. This to me solidified my support for the project and convinced me to come on as an advisor. Anyone who's been involved in DeFi long enough will tell you that this is a diamond in the rough when it comes to project founders responding to hard-hitting events. And as many of you know, I don't officially back many projects, but Warp's potential to challenge large DAOs like Maker and build better collateral makes me really excited to become a part of the team. The team opted out of doing a traditional ICO as well, and decided to instead do a fair launch structure, self-funding the project in its early stages, and as most Warp tokens are going to the community participants of the protocol, this further incentivizes adoption of its protocol and the space overall. Next up is DMM, or DeFi money market. For those who don't know, DMM is solving a really interesting issue that I feel many are sleeping on at the moment in the DeFi space. At the current moment, most of DeFi lives in the crypto space, entirely focused on assets like Ethereum without touching the real-world economy. This means that the broader market of DeFi is currently siloed, and with yield being the biggest value proposition alongside decentralized exchanges in DeFi, many users will want to obtain yields from real-world assets. And that's where DeFi money market, or DMM, comes in. DMM is an open protocol that allows anyone to lock up their stablecoin of choice and earn interest on real-world assets. This is made possible by users lending their stablecoins to the DMM DAO, who allocates that capital to real-world income-generating assets. The great thing about DMM is a combination of both its simplicity and transparency. In fact, for each asset that's purchased by the DAO, you can view unique liens or documents that display all the core details of each asset, providing a high degree of transparency for where funds are being allocated to in order to generate a yield. What I like about DMM is that it flips the traditional model of banking on its head. Instead of the banks taking your deposits or savings and lending it out to borrowers, keeping the vast majority of interest income for themselves, DMM is collecting yield from assets contributing impactful value in the economy and granting the vast majority of those earnings back to its depositors. It's a perfect challenger to the traditional financial system. And as a growing number of participants continue to look for yield in an economy where rates are starting to turn towards 0% if not negative interest rates, a fixed income yield of 6.25% that you can earn through DMM is going to sound extremely attractive to a lot of investors on the market, as well as traditional savers. And with the leadership of Gregory Keogh, who's worked in a lot of major financial companies like MasterCard, I'm highly confident the project will do well. We recently did an interview with him on the channel, and he explains the entire process.
And what we do basically, though, is identify assets that you can put this money into that's very stable, produces the yield, and they kind of are very over-collateralized. And why that's important is there's three, for it even to be qualified as an asset in the DMM ecosystem, it has to have three key attributes. So the first is you must have a first lien senior secured position. And that's just really long legalese. That means if anything goes wrong, you can take away the asset. That's basically what it means. Second is it must be producing over the interest we generate. So while we generate 6.25%, these assets are actually generating more. And I'll explain a couple seconds what we do with that. And then the third is it must be over collateralized on a valuation basis. So if something is worth $10,000, they may get $5,000. So they're very incentive to pay back, right? And so we think that, and then lastly, as you pointed out, all this stuff is totally visible. The liens, everything about it, the valuation data, which is by third parties, and we use Chainlink and their oracles for all of this. So we have a pretty good partnership with Sergey and the Chainlink guys on building this out.
Next up on our list at number 7 is Unibrite, a major heavyweight in the world of enterprise blockchain and an emerging player in the world of enterprise DeFi. Enterprise blockchain, in my opinion, is one of the major sectors of crypto that doesn't get enough attention, and for Unibrite, it's the project's area of expertise. Starting off with the Unibrite framework, Unibrite was able to provide a way to automate and dramatically simplify smart contract generation for enterprise companies, building a name for themselves in the space and removing immense barriers to blockchain development for enterprise companies. And unlike many other projects in the space, they didn't stop there, developing platforms like Free Equity, a 360 full-scale solution to security token issuances, one of the major trending spaces in the crypto space. For those who don't know, Unibrite was the first project I openly worked with as an advisor, and since I joined in 2018, the project has continued to grow steadily on a fundamental basis, constantly keeping the community up to date with impressive updates that include major technical upgrades or industry leader partnerships. One of the big moves they made this past year was the role in leadership and the Baseline protocol, an enterprise standard for businesses to cross-collaborate and do business over the Ethereum blockchain, while also maintaining important elements like privacy, permission, and performance, which are critical for companies to collaborate together on a public blockchain. Think of it like a middleware for enterprise companies to interact with the Ethereum network with their traditional ERP systems. Baseline includes heavyweight names like Ernst & Young, Microsoft, and Consensus, and is playing a leading role in defining enterprise adoption of smart contracts as well as blockchain as a whole. And with UBT being needed to interact with Unibrite's tech, it's already gaining major traction in 2020. So long as the team continues its steady pace of development, I'm confident it'll continue to grow going into 2021. And with the experience that both Stefan and Martin have with traditional enterprise systems, it makes them the perfect candidates to lead an exciting new project in the world of enterprise blockchain. And they've already had many major accolades over the last 2 years, landing large deals and partnerships with major enterprise companies, such as Microsoft, as well as Deutsche Bahn and many other companies on the market. Number 6 on our list is Loopring, an emerging decentralized exchange project that's been around since as far back as 2017, but is coming in to possibly pose a serious challenge to some of the larger automated market makers. As cryptocurrency markets grow and DeFi continues to expand, as well as absorbing in different types of assets outside of the cryptocurrency space, so will the growth of automated market makers. Loopring, which was originally a traditional decentralized exchange, had undergone some incredible feats as a platform in 2020, upgrading its structure to becoming an automated market maker, or AMM, and implementing its own custom solution of ZK rollups, allowing for over 2,025 trades per second, each costing less than a fraction of a penny. And with Loopring 3.5 going live not too long ago, I think that there's still a ton of fundamental value that hasn't been priced in yet. Loopring is the first major AMM to move to layer 2, a dramatic achievement as major players like Uniswap eat up currently 25% or more of gas fees on the Ethereum network on a daily basis, usually costing users anywhere from $5 to $20 just to make a crypto swap on the Ethereum blockchain. And as of recent, the total value locked up, or TVL, of the protocol has begun to pick up heavily, as well as diversify into other types of assets outside of the protocol's native token. But above all, my favorite component of the team is their dedication over all these years on delivering on their vision. We've been following the project since 2017, before there was even a term for DeFi, and they simply continue to deliver with the resources they have on hand. I'm really excited to see where the protocol will go, and along with that as well, at its valuation range, I think that it has a substantial amount to grow and prove itself as a competitor to some of the larger plays like Uniswap. Next up on our list at number 5 is Hedge, a protocol that allows for the creation of synthetic hedge funds that anyone can participate in. Synthetic assets have become extremely popular in crypto, especially with the recent surge in DeFi, and the ability to build basketed indexes or follow the trades or investments of your favorite funds or personalities is a fast-growing market, and that's where Hedge comes in. Hedge allows anyone to become a virtual, permissionless hedge fund, giving you the ability to create synthetic portfolios powered through the Synthetics protocol. People or groups can come together to attract capital by offering lower management fees or providing better market performance through their portfolio management. It's a truly exciting idea, and the UX of the platform is simple and intuitive, with a growing community already utilizing the protocol's functionality. You can track previous performance, previous trades, and fund strategies to get an idea of how the fund is approaching the market with your allocated capital. For someone like myself who believes in everyone being able to maximize their financial opportunity, this is a major leap forward, and with the right community development, could see major success in 2021. I've been generally skeptical about synthetic assets for the most part during my journey in DeFi, but understanding how large derivative markets have grown to in traditional markets, I can see the value proposition, the pros against the cons of synthetic assets, and I have no doubt that there's going to be a move of synthetic assets into the cryptocurrency space going into the next bull cycle. And the best thing above all is that the protocol is live and functionable. You can go ahead and test it out today by depositing Synthetic USD, the native stablecoin of the Synthetics platform, and you can instantly start investing into a wide range of different funds on the platform. And to top it all off, Hedge's native token, DHT, is sitting right under a $10 million market cap, being one of the smallest cryptocurrencies we're watching this year for our top 10. Next up on our list at number 4 is Chainlink. Last year recommended as our number 1 pick and yielding more than 1,500% since we discussed it, it's still on our radar for 2021. For those who don't know, Chainlink is a leading provider for Oracle solutions, allowing blockchain projects to pull information from the outside world. I'd highly recommend understanding the Oracle problem first before even considering investing in Chainlink or any other Oracle project. But once you do, you'll see just how valuable Chainlink's work really is at widening the use cases for smart contracts and blockchain technology. Between DeFi and enterprise blockchain, our two priority focuses for the next coming bull run, there's dozens of major use cases for oracles to make blockchain usable and be able to be utilized in more creative ways. Many people, myself included, are open to seeing other competitors in the space arise. There's not only different approaches to solving the oracle issue through different projects, but competition is healthy for the overall space. But to be honest, Chainlink's biggest proposition outside of its industry-leading technology is its overwhelmingly large community of partners that it's been building up over the last few years. To get an understanding of what Chainlink has to offer, I recommend reading through some of their blog posts. This one, diving into 77 smart contract use cases, provides a deep dive into the need for real-world input by oracles in order to broaden the use case of smart contracts and blockchain. And even though it's grown a lot in 2020, being right under a $5 billion market cap and at a discount to Ethereum and Bitcoin, I'm highly confident this could reach heights similar to Ethereum's highs in 2017. Next up on our list at number 3 is Uniswap. Being the largest automated market maker by far in the DeFi space and the pioneer in taking decentralized exchanges mainstream throughout crypto, Uniswap has leapfrogged to becoming an industry leader in 2020. Uniswap, as mentioned earlier, allows users to swap between any two ERC20 tokens on the Ethereum blockchain without the need of a centralized exchange provider. With the growing number of liquidity providers on the platform, the wide range of supported tokens, and its relatively low fees, it's become superior to many major exchanges, even outpacing the daily volumes of companies like Coinbase. In fact, I believe in the protocol so much that it's our native decentralized exchange provider within Digifox. We've had thousands of users making swaps from one token to another without any security issues, and in the end, paying much lower fees than major centralized exchanges. With such a high count of users and total value locked up on the protocol, I'm confident that Uniswap will maintain its spot as the #1 largest automated market maker or decentralized exchange in DeFi. And taking a look at valuations, though Uniswap is definitely already a market leader, having a few $1 billion of valuation under its belt, I love the fact that it's at a massive discount against both Bitcoin and Ethereum since its token launch in the summer of 2020, and I've already built a substantial position betting on it going into 2021. Next up on our list at number 2 is Ampleforth, a unique asset that emerged out of the DeFi movement to provide stability in the market. Now, I know what you're probably thinking, it sounds a bit counterintuitive, but give me a couple of moments to explain a bit further. For a long time, we've relied on Bitcoin acting as a potential store of value within the crypto space, an emerging asset with a fixed supply. And though Bitcoin has the properties to grow over the long run and possibly act as a store of value, it can still be incredibly volatile. Much like we discussed with Ethereum earlier, this doesn't serve well in cases where you need some sense of stability, like locking up collateral for loans. Ampleforth offers this through its peg target of around $1 and a mechanism of what it calls rebasing, which can include both increases and decreases of its supply, changing your token balance so that you're always owning a fixed percentage of the token supply. Think about it like a central bank on the blockchain that issues new notes or ample tokens when the price increases over $1, all the while not diluting your wealth through inflation when issuing those new tokens. Ampleforth can also do the opposite, deflating the supply when prices drop below $1, and its peg can be adjusted, usually to meet the level of inflations that the real US dollar has faced since the launch of its protocol in 2019. So for example, the current peg is $1.01. This simple but fascinating concept of rebases offers an incredibly interesting opportunity. Having an entirely decentralized asset that's targeted towards stability that also allows for people to pay a premium for stability, as well as buying at a discount when stability isn't attractive, could have major ramifications in the DeFi space as people look for different types of stable assets for use cases such as collateral or preserving wealth. The best way to think about Ampleforth is like a heartbeat pattern on a monitor. Due to fluctuations in demand for a trustless degree of stability, its price will range above and below $1, but it tends to always come back towards its central target of $1 in the end. And in 2020, Ampleforth exploded from an unknown project to a heavyweight in the DeFi space, climbing over 38,580% from the open of the year to its all-time highs. An extremely impressive percentage performance and a number very few cryptos like Bitcoin have achieved in a single year. And the crazy thing is, I'm confident it's just getting started. When analyzing Ampleforth in general, due to its change in supply, you want to view its market cap rather than its token price. And when analyzing Ampleforth's performance against Bitcoin, you should divide Ampleforth's market cap by Bitcoin's market cap. You can do this on charts.cointrader.pro, and it'll allow you to get a good visualization of how Ample is growing as an asset. Take a look over the last few months. We've seen nothing but steady, healthy growth for Ampleforth's market cap. It's constantly broken resistance, established higher lows and highs, and continues to outpace Bitcoin steadily, even during a time where Bitcoin is truly led against the altcoin market. It takes a while to truly get the value proposition of Ample as an asset, but I highly recommend you read through the website's documentation at ampleforth.org to gain more knowledge on how it works before you consider investing. Doing your own research is critical. While preparing this video over the last month or so, I thought heavily about what crypto would be worthy of the #1 spot on this year's list. And to be honest with you all, it wasn't an easy task to determine what coin I'd select. There's thousands of different projects out there and dozens that really have captured my attention going into 2021. And whereas many traders and supposed investors get caught up in the day-to-day noise of the crypto space, focusing on one speculative crypto to the next on any given day, I'm more focused on investing for the long term, holding plays that fundamentally reshape the way we do things in our day-to-day lives. There weren't many plays that fit the description of having great growth potential while also not posing much risk, but I'm confident I found a crypto worthy of that title. #1 on our list is Ethereum. Now, I know what you're probably thinking, so please give me a moment to explain my position. An important thing to realize that some of you may or may not have noticed is that every single DeFi project and every token we talked about today for that matter lives within the Ethereum blockchain. And though Ethereum is the second largest cryptocurrency, it didn't get there by pure speculation. The protocol has the largest open source developer network in crypto, with over 10,000 unique Solidity developers building value on it through the DeFi and enterprise blockchain space. And with the preparation for ETH 2.0, its long-term game plan to scale to thousands of transactions per second, while also shifting its consensus mechanism to proof of stake, which brings dramatic decreases in energy consumption, Ethereum is setting itself up for major success in the long run. What was originally looking like it would take 3 to 5 years may be completed by as early as 2022, towards our predictive end of the cycle. If this update goes live and the transition is smooth, it will likely forever solidify Ethereum's lead in the competition of blockchain protocols. Increased transaction throughput and staking rewards will provide immense buy-side pressure for Ethereum as an asset, leapfrogging its valuation as we go through each phase of the ETH 2.0 upgrade. I highly recommend researching into the details of each phase and understanding Ethereum's plan to scale long term. It's highly insightful, and for those wondering about my investment thesis for Ethereum, I keep my sights extremely simple. Right now, Ethereum is less than 1/5 the market capitalization of Bitcoin, and expecting that it will repeat history and outpace Bitcoin like it has in the past, even during a time when Bitcoin will likely rally to somewhere between $100,000 to $200,000, our target we've held for some time on the channel, I feel Ethereum could charter towards $10,000 to $12,500 per coin. These sound like entirely unreachable valuations, but with crypto being such a small market, it's entirely achievable within the cycle when we're actually considering market capitalization. And so far, our thesis has been holding true since the summer of 2019. Bitcoin has continuously been outperformed by Ethereum, setting at higher lows each and every couple of months. I'm confident we're not too far away from a full-on breakout in early 2021, which will be the inevitable spark of the altcoin cycle, leading Ethereum and many other cryptocurrencies to higher levels. But again, the most critical thing we'll have to see is whether or not Ethereum can pull through on its major upgrade launching ETH 2.0. No, I'm not an Ethereum maximalist. Heck, I own many other cryptocurrencies outside of the Ethereum network. And I have to give honorable mention to the emerging development in ecosystems like Polkadot that could become serious competitors to Ethereum in 2021. But I'm certainly a realist, and I like to see the value built first before focusing on what could happen or be built in the future. And that's where Ethereum shines as a protocol. It's established a name for itself. It's consumed DeFi and enterprise blockchain, and this year we're sticking strong with it for our game plan. Taking a look at our top 10 list for this year from a bird's eye view, we can see that we cover a wide range of emerging areas in crypto, DeFi, and enterprise blockchain, giving a good spread of overall low to high risk plays that are all doing phenomenal things in the crypto industry on a fundamentals basis. And as I always emphasize, please do your own research. And if you don't see a coin or token on this list, it doesn't mean that I don't like it and it's nothing personal. In a space of thousands of coins, it's just too difficult to choose just 10 projects alone. The important thing to note is that above all, if you're looking to buy any of these tokens, they're available to trade on Digifox, my cryptocurrency smart wallet that I self-funded. You can make trades paying fees at 1/3 of the rate of Coinbase and get access to over 55 different exciting cryptocurrencies. Plus, we offer in-app customer support, so unlike other crypto apps, you'll get that human touch that many exchanges and DeFi platforms lack. And last but not least, if you like this kind of research, a great way to get deeper insights into both cryptocurrency markets and traditional markets like stocks, commodities, and Forex is our newsletter here on the channel, the Dash Report. It's a great way to support the channel and can give you a great overview of what I'm watching across all major markets. Well everyone, that's it for this year's Altcoin 2021 video. I can't thank you all enough for the support all these years that you've shown to me. We've been running Data Dash since the summer of 2017, and it's been an incredible journey to be here with you all throughout this entire period of time. But one thing is for certain, going into this year in 2021, we're going to be entering into an entirely new frontier for cryptocurrencies as an asset class. It's going to be wild and crazy during many times, but through the good times and the bad times, I'll be sure to be here with you all every step of the way. So if you're up for it, consider dropping a like if you enjoyed the video, subscribe and hit the bell icon if you haven't already so you won't miss out on another video. We hope you'll join the Data Dash community today. Until the next video everyone, see you all in the next one. Take care everyone.